This madness? Are we staring at a bottomless pit? That's the question. Joining me now is the head of sales at HDFC Securities, Parag Thakkar. Parag, thank you so much for coming to the studios today. I mean, a lot of people have seen a lot of pain today, and global markets aren't giving us any comfort. What's your take on what's happened today?
So last time I think we spoke on this, that extremely low commodity prices and sluggish global growth, this can trigger some kind of a large scale default somewhere, and that is what market has started to price in now. Gold prices going up, German bonds, bond yields declining, US bond yields declining to such a fast extent. So I think that event is getting more and more priced in. So to that extent, I would say that within next 1 or 2 weeks, you will find that some sort of bottom is being made, because now market is also pricing in that there will be no further rate hikes, and definitely there will be a increased probability of newer avatar of QE, even in US.
Yeah, we heard Chair Yellen talk about, someone asked a question about the possibility of negative interest rates in the US. She said, we're not very sure about the legality of it, but we will find out more and come back
so
to
considering the global growth situation and extremely low commodity prices, which actually hurts everyone if it is so low. It hurts, the companies who produce oil, countries who produce oil, the banks who have given leverage to them, credit growth.
Parag, I get all of that, all of the points that you're making, and I buy into that, but I want to ask you a bigger and perhaps more uncomfortable question. All that's wrong here with us back here. The way we've seen these bank earnings, the reactions, the commentary we've got from the RBI governor, he came out, I would say, to perhaps to clarify to the market at a very critical juncture this evening, saying that this needs to be done. You need to clean up the house. You can't wait for growth to happen and then clean up your books. You need to clean up right now. Your take on the earnings and the bank problem?
Yeah, so mostly this problem has come from lower steel prices, dumping by China, or stalled projects in the infra space. So government now has done something for steel. They have come out with minimum import duty, and for stalled projects definitely they'll do something. So yes, you have to recognize now, and so if hopefully economy recovers, and both on steel side and the stalled project side, if there is some recovery really, then there'll be windfall gains for banks after some time, because right now they are reversing the interest also, right? Whatever they have actually taken credit for, or shown as income, that is also getting reversed as they declare NPAs. So their NIMs are looking very low, and their asset quality issues are coming out in open, and numbers are very large, as we all know.
While yes, as and when things recover, it will recover quickly and sharply, hopefully. Right now, would you advise any sort of buying?
So I maintain my advice that you don't have to commit your entire capital in the market at this point, but you are getting very good opportunity, very extremely compelling price if you have a 2 to 3 year view. So you should buy on every dip small quantities. That's my advice to retail investors, that now large cap sale is going on. You are getting 50%, ICICI Bank, I think high was 395, today it touched 198, exact half.
But that's another counter question, because the moment those SBI numbers hit the screen, we saw a sell-off now start in private sector banks, which till now, most analysts were in agreement that private sector banks are really the place to be. But now the selling is now shifting over, so to speak, or perhaps widening. So therefore, for retail investors, would some of these large cap blue chip private banks still make sense?
I think definitely it makes sense, but you cannot time the exact bottom. I cannot say that it will not fall by another 7-8% from here on. They can. So, because see, actually it is converging. The bad issues, the worrying points are all converging together. It's globally it is so bad, and on the domestic side you have banks coming out with such numbers. So, and plus there is over ownership also. And to answer your question on private sector banks, see, some of these banks had not fallen so much, right? Where the asset quality issues are not that great, and mostly those are retail kind of banks. So that is where people feel that at least here I am making money. So they sell that.
So the top 2 or 3 nifty stocks that you would buy right now if you were to go out and depute some capital.
Correct. So I would like to buy Coal India because it's a 6% dividend yield stock. Volumes are going up. Right now, of course, there is pressure on pricing in the FSA, and this result also reflected that. But I think it's a matter of time. So Coal India is one. Tata Motors is the other thing, because I feel that, just JLR margin, which came at 14.2% against expectation of 14.8%, I think that 0.6 bips in such a large business of 2,70,000 crore business and 40,000 crore EBITDA. I think business is available for 1,20,000 crore EV. It is extremely cheap in my view. So that is the other. And third, I would buy any corporate bank, either SBI or ICICI, but that definitely one needs to buy on dips, on dips and gradually.
Parag, good talking to you. Thank you so much for joining in on what has been a really difficult day for the market.